How Marc Andreessen is investing in the face of market volatility across the globe. I'm Emily Chang, and this is Bloomberg West. Coming up, Twitter gets a vote of confidence, and Marc Andreessen tells me who he'd like to see running the company. Plus, why Workday CEO Aneel Bhusri believes we are in a tech bubble, and where he expects to see some mergers and acquisitions. And Netflix says goodbye to major Hollywood films like The Hunger Games. All of that ahead on Bloomberg West. We start, though, with the markets. Stocks seeing their worst month in 3 years. Investors losing confidence in Beijing's ability to prop up markets in China. Tech stocks like Apple and Netflix had been propping up the broader markets, though those along with Facebook, Google, and Amazon all closing in the red. For more, I want to get straight to New York and Bloomberg's Matt Miller. Matt, what's your big takeaway from the way things played out today?
The big takeaway is that after a week like we had 2 weeks ago, there's almost no recovery possible for the market. I mean, last week, even though Monday was this terrifying 1,000-point drop on the Dow, we finished up 1.1% for the week. So that didn't stop the entire month from being the worst August that the Dow has ever posted in 17 years. It was the worst month for the Dow since May of 2010, the worst month for the S&P since September of 2011, and the Nasdaq since May of 2012. It was just awful for stocks because of that week 2 weeks ago where we lost 6% on almost every single index. Take a look at some of the big losers if you want to look at them. Media companies really reigned as far as the point losers. Disney kicked it off, remember, with a poor earnings report showing that ESPN didn't have the kind of subscriber growth or earnings that we would have thought about. That kind of raised the specter of cord cutting, and Viacom took it even further the next day. Now, Viacom's the biggest loser as far as media companies for the month of August, off 28%. But you'll also note that 21st Century Fox lost 20%, and Disney was down about 15% as well. I was just looking at Apple for the full month. Apple lost more than 7% for the month, and today was down another 0.5%, even though, and I'm sure you're going to talk about this, a very cool cooperation announced by John Chambers and Tim Cook. Apple's going to work together with Cisco to make Cisco's products work better with Apple products and vice versa for corporate networks. So some interesting stuff there. Emily, back to you.
Right. This is part of Apple's big push into the enterprise, but certainly didn't help them in the markets today. Okay, Matt Miller in New York, thanks so much for breaking it down for us. Tech companies like Apple are not only moving the markets, but they are also being watched in Washington. Apple is now part of a new public-private partnership with the Department of Defense to build cutting-edge technologies that could be used in the military. And Defense Secretary Ashton Carter has been courting Silicon Valley investors and startups as well during his visit last week, where I spoke with him. One of the key people he spoke with, venture capitalist Marc Andreessen, co-founder of Andreessen Horowitz. I sat down exclusively with Andreessen to find out what he thinks is behind all this market volatility.
Yeah, I'm not really that worried about anything happening here right now. The big thing is just I think the markets have been trying to adapt, number one, to the new economic data coming out of China about the issues in the Chinese economy. And then the other thing is American companies, and you guys have covered this extensively, global currencies have really moved against American multinationals just in the last 6 months. And I think, frankly, I think Wall Street was slow to adapt to the reality now that the dollar is much stronger versus all the other currencies. And when a big company comes and says we missed our numbers because of currency changes, the presumption from investors is an excuse. In the last 6 months, a lot of that has actually been true. And so I think people are adjusting to this new currency world. I think, though, the currency shift is reflective. The U.S. is doing really well. There are issues in many other countries in the rest of the world, but the U.S. is doing really well. And I think from a U.S. standpoint, things are doing pretty well.
So Bill Gurley is warning startups to prioritize profitability over growth. Mark Benioff told me earlier this week he thinks there's going to be a lot of dead unicorns ahead. How do you think the shakeout looks when it comes to private tech? What does it look like on your side of the equation? Well,
look, so these are, as I would say, that I think situation normal. These are startups. Some of them are going to work really well. Some of them are going to not work at all. In some environments, it's easier to raise money. It makes sense to prepare for environments in which it's not as easy to raise money. To me, that doesn't, though, translate into a call for everybody to panic. I think each company should figure out its own strategy and execute its own strategy, and that's what we work with our companies to do.
So last question, if the headline on Sequoia's slide deck in 2008 is RIP good times, what does Andreessen Horowitz say right now?
Well, that's reflective. Sequoia is an extremely smart firm, but that's reflective, which is 2008 was not RIP good times. And so our general attitude, I don't know if we have a headline, but it's be measured, be cautious, be careful, but also invest in growth. And when we have companies that are growing fast, we don't tell them to pull back because the stock market blips. In fact, if anything, we tell them to push forward and go take down the market. And so for the companies that are doing well, I think they're going to do really well.
Just a blip, that according to Marc Andreessen. Now, one stock that is gaining today is Twitter, up 3.5%, back above its IPO price of $26 a share. This morning, SunTrust analyst Robert Peck upgraded his Twitter rating from neutral to buy. He expects clarification on Twitter's CEO search efforts around Labor Day. We do know that Twitter's board is scheduled to meet this week, and we will be watching for developments. I also asked Marc Andreessen who he thinks should become the next CEO of Twitter. Take a listen.
I'm reflexively in favor of founders running these companies whenever possible, and so I think if Jack or Ev or some combination of the two ended up in back in leadership at Twitter, I think that'd be great.
Now, another story we are watching: the White House drafting potential sanctions aimed at companies and individuals in China for hacking computer networks. Bloomberg News says the measures haven't been decided on yet, but the discussions come at a particularly sensitive time. China's President Xi Jinping is expected to make his first official state visit to the U.S. next month. There's also concerns that sanctions could trigger further online hack attacks. Now, I did ask Andreessen about his views on cybersecurity and the relationship between tech companies and the Pentagon. Take a listen.
The Department of Defense 50 years ago was the first customer of all the new technology companies, but over the last 25 years, the Defense Department focused much more on, the large federal contractors. There's a much bigger focus from DoD now on working with early stage companies, and that's starting to work now.
So, in your view, how can Silicon Valley help national defense?
So I think national defense has become synonymous with technology, with technological sophistication. Cybersecurity is a perfect example of that, but even conventional warfare is now heavily influenced, and the future of it is being heavily shaped by new technology. And so at least my belief is early stage companies and new technologies can play a fundamental role in national defense, and I know Secretary Carter certainly believes that.
What's your ask from Secretary Carter? What's your number one ask?
Well, so the big thing is a tech startup is the smallest high performance organization in the world. DoD is the largest high-performance organization in the world, and so it's very hard. There's no natural fit between organizations that small and that big, and so developing pathways where young companies can engage and can get results in a time frame that makes sense for young companies, and where DoD can get the benefit of the new thinking and the new technologies, without fundamentally changing how it does procurement, but having a way to basically get involved early is really, really critical, and that's what this new unit out here is set up to do.
What's the biggest risk to our cybersecurity right now? I mean, are we being outspent by other governments, other private sectors, China?
Yeah, well, so the biggest risk, I would say, two things. One is just we're not used to defending against nation states. 20 years ago, defenses were all against, literally teenage kids, right? 10 years ago, defenses were against organized crime, criminal gangs, and now the defenses are against nation states. And so the threat profile has changed dramatically. And then cybersecurity, like other kinds of security, it's inherently asymmetrical, right? So the defender has to be correct 100% of the time, but the attack only needs to work once. And so defense is always going to be a bigger challenge than attack. And so if you make the attacks more sophisticated, the defense has to get much more sophisticated. And I think we as an industry are still in the process, frankly, of catching up to that.
Marc Andreessen there, co-founder of Andreessen Horowitz. We should mention that Bloomberg LP, the parent company of Bloomberg Television, is an investor in Andreessen Horowitz. Coming up, maybe Marc Andreessen is optimistic, but Workday CEO Aneel Bhusri tells me there is a bubble in the private tech markets. And this week, we've got a special focus on virtual reality innovators. Coming up, an in-depth look at one company using VR to transport you to a virtual world. And now to the cloud. Workday reporting another strong quarter as it pushes further into Europe. I sat down with CEO Aneel Bhusri to check in on everything from tech valuations and consolidation to the progress Workday is making in its financials vertical. Take a listen.
The marketplace for financials is about twice the size of the HR market, so we're very excited about the prospects.
Now, on the earnings call, your CFO said you could be profitable if you wanted to be, but you're going to focus on growth. Why focus on growth now in this current climate, lots of market volatility?
You know, our business is a once-in-a-decade transition. We went through the shift from mainframe to client server back in the 90s. You saw the growth of PeopleSoft and SAP and Oracle. We're in that once-in-a-decade shift again, and it's basically a land grab for market share.
So let's talk about those legacy competitors. Oracle and SAP seem to be getting a lot more aggressive, and they spend more on marketing than Workday and Salesforce combined. How do you defend against that?
We continue to differentiate on two things, on products and customer success. Of our 1,000 customers now, we've passed 1,000. 70% are in production, and we're running at about a 95% customer satisfaction level.
When it comes to enterprise software, obviously you've got such a long history in this business, having founded PeopleSoft. We've talked about the established competitors. Then you have the up-and-comers like Slack, like Quip. They all want a piece of this market. You know, where do you see this going, and how do you, as a public company now, stay nimble enough to compete against all of that?
For us, we stay very close to the startup world. We just introduced Workday Ventures, so we actually make small investments in small companies. I still hang out with my buddies at Greylock to see what's coming down the pike, and internally we still organize around small teams. Because
of your work at Greylock, you also are dialed into what's happening on the private as well as the public side, but what do you think about the market volatility?
I don't worry about it very much, because I don't think we're on the verge of a financial collapse. I think at the end of the day, if you focus on building a great company, stock prices follow revenue and earnings growth. You just have to take the long-term perspective. I do think there's been a disconnect between the private markets and the public markets. The public markets for tech companies have been pretty rational for a long period of time. The private markets have been less so rational, and maybe with these corrections, the two will come closer together.
So what does the shakeout look like on the private side? I mean, do you see down rounds? Do you see delayed IPOs?
Both. And I see a lot more in the way of merger and acquisition activity. There's quite a few interesting properties out there that folks like Salesforce and Workday would like to acquire, and the prices have been too high, and maybe with this correction, they become more attractive.
So what areas are you interested in?
Always interested in core technologies. I'd probably say the biggest areas around analytics. And then as people move into the world of industry-specific applications, that could be another area of interest for us.
In looking at a lot of these recently public tech companies, you've got Twitter flirting with its IPO price, Box below its IPO price, Etsy, Lending Club. What does it say about the health of the valley that a lot of these newly public tech companies just aren't doing well?
I think you have to separate out how their stock prices are performing right now versus how the companies are doing. You know, I'm familiar with Box. They continue to grow their business.
So we talked about M&A when it comes to smaller companies. Salesforce, for example, there's been a lot of chatter about Salesforce selling out to someone big time. What's your take on that?
You'd have to ask Marc. You know, Marc's a good friend. We talk about how our two companies partner together. I'm not privy to know what's happening. To me, he seems very committed to building a great business, and he's been a great partner for us.
So there's also been chatter about Workday selling to Microsoft. How would you address that?
First of all, we don't comment on those sorts of rumors, but we are very focused on building an independent company for the long run.
And just last question, as someone who lived through '99, has founded multiple companies and seen a lot of shakeouts, what do you think we're seeing right now? I mean, the term bubble is thrown around, but it just seems to not accurately reflect what's going on.
Yeah, I don't think there has been a public market bubble. If you look at the valuations in tech, they might be a little bit higher than historical levels, but that's largely because of low interest rates. But if you look at the Workday trading ranges on multiple basis, it's not that different than Salesforce at this same size 6 or 7 years ago. So the bubble happens has happened in the private markets, and that will have to sort itself out. I don't think it'll have a big impact on the public markets, but there is a bubble in the private markets, and when you have to take a company public or you have to sell it, then you get mark to market, and then we'll find out how much of a bubble there was.
So then will it look like '99? Not
to the same extent. And the people mostly impacted will be venture capitalists, late-stage investors, not the public market, where in '99, 2000, the public market was really impacted, and that sent the markets and the economy into a tailspin. I don't see that happening this time around.
Workday CEO Aneel Bhusri there. So this week, we're focusing on emerging leaders in virtual and augmented reality. And first up, we've got The Void. They've got a different way of looking at indoor entertainment.
So The Void is an adventure. lot of people have described it as a VR theme park, but really I think it's something more than that. It's an ability to step into a completely alternate world. So we wanted to make it more than virtual reality, and in order to enhance it, we had to kind of merge that with physical reality. So we're doing everything in-house. We have everything from engineers to visual effects artists to various forms of video game development. What we can do is we can merge different types of effects like wind, hot and cold, moisture. We can also affect sound transducers so that we can do different types of vibronic effects. Basically, we want people to go in, put on the equipment, and go into another world and forget that the equipment was ever there. There'll be half-hour experiences. The price points that we're targeting right now is somewhere in the range of about $29 to $39 US, and our goal is to develop at least 250 to 300 centers worldwide within the next 5 years. This really is not just a business venture to us. We really are trying to bring something amazing to the world and create a new form of entertainment.
Tomorrow, our series continues. We'll show you how augmented reality is changing the game for visual search and mobile advertising. Up next, major blockbusters are leaving Netflix for Hulu. We'll tell you which ones and why. And as we head to break, we'll leave you with footage of Uber's new Mad Max cars, which will be providing free rides to Uber users in Seattle. All part of a partnership with Warner Brothers to hype Mad Max's video game debut on September 1st. And we turn now to the Daily Bite, one number that tells a whole lot. And today's number is $768. That's the amount of the disability allowance the French courts granted a woman who says she is allergic to, get this, Wi-Fi. The woman says she suffers from electromagnetic hypersensitivity. Yes, there's a word for it. A condition recognized by the World Health Organization. EHS is characterized by fatigue, numbness, tingling, nausea, dizziness, when exposed to cell phones, Wi-Fi, or even batteries or screens. The World Health Organization says research has not been able to provide support for a link between electromagnetic exposure and the symptoms reported by sufferers of EHS. The court ruling also does not mean that EHS is considered a formal illness. We're trying to get a second opinion on all of this. Now, another number that caught our eye, $44 billion. That's the staggering amount of money that Samsung has lost in market value since April, making it their worst losing streak since 1983. Samsung, which is the world's largest smartphone vendor, is struggling to compete against the high end, against Apple's iPhones, and at the mid-range and low end of the market, devices made by companies like Xiaomi, Lenovo, and Huawei. Now, let's talk about Netflix. Big changes are coming. Customers will no longer be able to stream major blockbusters like The Hunger Games, Catching Fire, World War Z. Epix, who owns the rights to major blockbuster hits, will switch its partnership to Hulu after Netflix decided not to renew the contract. The company is now putting its focus on creating more original content with big names like Brad Pitt, Judd Apatow, Sofia Coppola. Joining me now are Bloomberg News reporter Anusha Sakui and Brad Adgate, Senior Vice President of Research at Horizon Media. So, Brad, I guess my first question would be, can Netflix keep up all this original content to sustain its business model going forward? I mean, people like Kevin Spacey and Brad Pitt, they're expensive, and there's no guarantee of another hit.
Yeah, no, you're 100% right. It is really risky, but I think that Netflix feels that exclusive content and original content are things that are going to grow their subscriber base, and that this is the path that they've decided to do. And you know, the Epix deal, you know, they have a deal with Amazon Prime, and they have one with Dish's Sling TV, and they didn't like that. So you know, the deals that they're making going forward, like one with Disney, is going to be exclusive, and that's the route they want to do.
Anusha, is there a sea change happening in Hollywood right now? I mean, how do the content creators and the actors feel about Netflix? I mean, does Netflix think, is all the momentum moving in Netflix's direction?
One of the things that Netflix has proven that it can do is that it can really promote a movie or a TV series. I mean, it's been doing that more on TV series. So, you know, shows like House of Cards, you know, they're so part of our culture now. And you know, we've seen with TV many A-list actors going to TV, whereas it used to be shunned in favor of movies. So, you know, Netflix is in a strong position, and, you know, Amazon has joined it in this move towards originals. And, you know, we're seeing Netflix wanting to do Oscar-worthy films. So they have a film, Beasts of No Nation, with Idris Elba, which will be making a splash at the Toronto Film Festival in a couple of weeks. And
so Brad,
no doubt they'll be hoping it'll be an Oscar contender.
Brad, what are you going to be watching in terms of signs to see if Netflix can really keep it up? Does it all come down to whether they can come up with another hit?
Well, I think you really have to look at the subscriber counts, and what they're focusing now is global distribution. You know, they're just rolling out in Japan. It's their first Asian country, and you know, their goal is to be in 200 markets by the end of next year, or at least that's what they've said. You know, they're in 41 million homes right now in the U.S., and really, if you look at the pay premium sub count, it's really about 60 million. So the real growth and what's really going to sustain the revenue that they're going to need to get content is going to be global distribution. And I think you have to realize that, you know, some of the projects that they're picking up may have more appeal around the world than in the U.S.
Anusha, what does it mean for the Netflix competitors like Hulu, like Amazon Prime Video?
So as you know, Brad was saying, one of the reasons Netflix isn't so bothered about this is because about Hulu's content is because it's not Epix's content is because it's not exclusive, and they want exclusive content, and they're going to have exclusive content from, say, Disney. You know, it's possible that, you know, analysts are already looking at who else might come in and pick up their content. You know, Comcast is possibly one. You know, acquisition costs of films and movies has been rising for acquirers like Netflix. So this gives them something like an estimated 180 million by one analyst note I saw to spend on original content.
Okay. Anusha Sakui, our Bloomberg News reporter who covers entertainment, Brad Adgate, Senior Vice President of Research at Horizon Media. Thank you both. We'll be watching. That is it today from San Francisco. Tomorrow I will be joined by the head of YouTube's global gaming, Ryan Wyatt. We'll talk about how he plans on winning over Twitch users.